The Lexington economy is doing quite well, but the local apartment market is not. Why is that? Well, it could be a factor that you might not expect in a college town like this one. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons, your Lexington update. The Lexington economy had a good year in 2013. The metro added 5,600 jobs, expanding the employment pool by 2.1%. You can see that's down from a big peak in Q3, but that may be a blip from the data from the Bureau of Labor Statistics. And more good news is coming. Toyota is expanding its big manufacturing plant nearby Georgetown to produce a Lexus model in the U.S. for the very first time. That expansion is underway now and will eventually add 750 jobs once completed. So good economic news and a good year for the local economy, but not so much for the apartment market. Apartment occupancy rates cooled 240 basis points year over year to a rate of 93%. You can see occupancy has really come down since peaking around 96% more than a year ago. And that's a pretty sharp drop, reflecting net move-outs from 362 units. And that's a bit of a surprise given that the demand drivers should be strong. We'll come back to that story in a minute, but let's first look at rent growth. Same-store rents for new leases climbed just 0.8% in 2013. That was Lexington's weakest year-over-year number in 13 quarters, and it's way below the peaks of 4%, 5%, and 6% rent growth seen in parts of 2011 and 2012. So what's happening in Lexington? For one, this is a small market, and we like to say this all the time, so being smaller, it's susceptible to big shifts in performance. That does happen, and maybe volatility leads to a sharp upward correction in the next couple of quarters, but there is another possibility here. Single-family home sales jumped 20% between 2012 and 2013 in Metro Lexington, according to the local realtors. Now, you might not think home sales will be a big factor, given this is a big student housing market, but obviously the job growth is coming in is going to non-students who are looking for a different type of housing. And so what we saw is that occupancy rates got very, very high in recent years, higher than usual, as a lot of the housing demand was going toward apartments. But as the housing market thawed and more confidence, people placed more confidence in single-family home sales, we saw demand shift that direction, and we saw a correction in terms of the balance of single-family versus apartments, and a lot of demand went that direction, so occupancy rates for apartments came down a little bit. And so what seems to be happening is maybe going back to an equilibrium for our apartment occupancy rates, which tend to be in that 93-94% range where we are now. Well, what does that mean for 2014? Well, we think that we're going to see pretty much more of the same, that the Lexington apartment market is stabilizing or should be stabilizing to see occupancy in that 93-94% range. So we should see occupancy tick up a little bit, but remain below 94%. And that should help inspire more sustainable rent growth levels in the 2.5% range going forward. And that wraps up for Lexington. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.